Good evening, my fellow Riz Elite members. This is Chris with Riz International and the man himself, Riz. Riz, how you doing tonight?
Doing well, and you?
I am doing good. I know probably some of you can hear in the background. I'm at a friend's house this evening, so hashtag dedication for doing webinar tonight on remote. So hope you guys enjoy it. And this is your weekly market recap. So as always, we'll go ahead and start taking a look at the S&P 500 here. It was kind of an up and down week in the market, especially on Friday. Friday was ridiculous with breaking news. On Thursday, we did manage to break the all-time high on the S&P 500, but then Friday was a huge up and down whipsaw in the markets with tweets and news and yes, we're doing the trade deal. No, we're not. China doesn't know what they're talking about. The tweeter in chief was in full force on Friday and had a big indecision candle in the market on Friday. But overall, as we can see, the markets have been pushing up pretty steadily over the last couple of weeks. Things are looking very positive. Riz, what's your take on things with the markets? What's been going on?
Yeah, so ultimately, the favorable phase one trade deal, remember, this is the phase one. So there is still tariffs on China. There still is some of that back and forth dialogue between Chinese officials and U.S. officials. But the phase one, I can confirm, has been done. China has agreed on that. We are seeing that, futures should be green unless something kind of happens to kind of skew that. But I think this rally is a bit overdone, but that's just me. It has room to go. It's a nice breakout. That means people are buying, people are bullish. And of course, you cannot fight the market, right? So we have to kind of go with the flow. And in this case, I thought it was prudent to close a lot of positions. On Friday, if you were paying attention in the Discord server, I closed a few positions simply because there was that uncertainty, and based on I would say prior historical precedent, we know that the president of the United States, Donald Trump, uh, sometimes says things that do not fully pan out. So I thought it was best to kind of be cautious, but nonetheless, you can't go wrong with taking profits, and it was a good way to hedge our exposure. I think Monday should be a good day this week, leading into really the holiday season. Is going to be one where a lot of we start having a lot of tax loss harvesting going on. A lot of mutual funds, a lot of hedge funds start closing positions that they think are best to take a loss on. So keep that in mind. Does this mean that we're going to be seeing markets tank because of that? No. Usually this volume is absorbed by the market. So it's not the end of the world, but just be aware that if you see certain stocks that are down get further pushed down, it's not unprecedented. Okay, this is a neat little thing that not everyone who's a beginner knows. That mutual funds primarily do dump positions that they're not doing well on. If they don't want to go with their thesis anymore, doesn't mean they're going to close every single position that's in the red. Okay, to take the loss. That's my thoughts. Keep in mind, of course, as Chris knows full well, after this week we probably have decent relative volume. Beyond that, be aware that we're going to have lower volume until the end of the year. So we'll see how day trading as a whole goes. Swing trading, I'm sure there'll be some opportunities, but I think we don't want to kind of force our hand here. That's kind of my remarks for the market overall.
Yeah, I have to definitely agree with you on that. My experience is, the week leading into Christmas has always been low volume in the market, and it really makes it difficult, especially for day trading and things like that. So, for everybody who's been following me in the day trading channel, please be aware that there may be less trades coming up in these coming weeks. I don't want to try and force anything. If we don't see it, and the same goes for swing trades, with Riz, we don't want to try and force our will on the market. As you said earlier, you can't tell the market what it wants to do. It's otherwise it's going to show you who's in charge, to say the least. All right, let's keep going. Speaking of the market, let's go ahead and take a look at the breakdown in the market from the different sectors. And holy cow, look at tech up 44.29% on the year at this point, outshadowing everything. There is a tight, the three sitting there right in the middle would be the financials, real estate, and the S&P 500 itself, all sitting there right in the mid 20s, 20th percentile there. The S&P 500 itself up 26.82% on the year. Those underperforming sectors, again, real estate is slightly underperforming. Utilities only up a paltry 21.84% on the year. And healthcare has made a huge rebound over the year so far from where it was in about mid-April. With the Bernie Sanders tweet, has made a fantastic rebound since then. Energy continues to be in the doldrums here, currently only up 3.13% and has been in the red several times this year so far. Riz, what's going on with tech? Why is that just going bonkers right now?
Yeah, thanks. Good question. So we, as asset managers, looking at top down, which is really, if you have to say, what is my job? It's not my job to scalp or whatnot. My job is to see the overall markets. And tech is one of those things where it is, number one, the largest sector. So we know the S&P 500, which is what these sectors are. So the S&P 500 has many different sectors. These are the main ones, right? There is manufacturing sector, but because if we added all the various different sectors, there'd be like 20 different lines. And as it is, just looks crowded, right? So we have the major ones up. Now, with that said, tech is without a doubt the leading one, as you can see, up 44% year to date. Why? Because tech makes up the largest market cap, okay, largest portion of the market cap of the S&P 500. Remember, the S&P 500 index is market cap weighted. So what does this mean? If there are 500 companies in the index, okay, think of it like a basket. There's 500 companies in it, and the S&P 500 index is like the average of all those, except all those 500 companies are not equally weighted, okay? Not every stock has one, think of it like a vote. Not every stock has one vote. Some stocks have lesser votes, okay? The ones with the most clout, the most votes are the largest companies. Think Apple, Microsoft,
Riz,
Amazon.
do you want me to bring up the FinViz heat chart that shows kind of the breakdown?
Sure, absolutely. So while Chris brings that up, ultimately we need to understand that tech is the largest part of the index. And as a result, you will obviously be well aware that what happens to tech broadly happens to the market because it's such a big part. We know that when Apple gets battered, or if we have something like Facebook get hammered or anything like that, Amazon gets hammered, then we see a big pullback, right? So understand that this isn't, I would say, unreasonable, right? Be aware that companies that are more so in the various different sectors like services or whatnot, they too obviously have an impact on the market, whether it's financials or real estate or utilities, but sometimes they're not that big a deal. The moment you see tech get hammered, be aware that the US index, the S&P 500 index, can also get hammered. Okay. So thanks, Chris, for bringing that up. Good question.
Yeah, no problem. All right, let's go ahead and take at the broader world markets here. So, obviously, here on the top right, we have the Chinese markets, and obviously some hesitation leading into the week, a little bit of consolidation, and then on positive trade news pushed up higher on Wednesday and Thursday. A little bit of pullback on Friday, probably dealing with all of the news catalysts and things of that nature could cause some fear and some pullback there. Go ahead and taking a look at the other markets here. We see the emerging markets having a massive rally this week on positive trade news, and the same could be said for the developed markets as well. Here on the bottom right, all pushing up higher at this point. Things are looking pretty good in my opinion so far. And then you want to have a comment on that, Riz? All right, well, let's keep going. Moving here to my personal favorite slide, we have the asset classes. We see here that oil is not doing a whole lot as of late. You'll note that we haven't made many oil plays lately as we used to earlier in the year when we were getting larger moves. Now, of course, you could be saying, well, Chris, why didn't you buy down here and you would be up now? Well, there was, of course, looking back, hindsight, you could, yeah, that would have been great. But honestly, this is a really slow grind. These are not the typical moves out of oil that we see. You see, when these Bollinger Bands here start getting cinched together, it will indicate that, there's a lot less volatility in that, particular ticker. Of course, we're looking at crude oil. So the moves right now have been getting a lot smaller. We haven't been seeing the volatility there lately, which is part of the reason why we haven't been taking actually no oil trades as of late. Taking a look at gold down here on the bottom left, after the huge rally in the late part of the year, we have been coming back down, and we are now seem to have broken out of this downward channel that I drew for you guys a little while ago, and we're really just consolidating at this point. We're kind of bouncing off here on this support level around 1450, and it's just kind of bouncing around, not really giving us a solid move either direction at this point after this pullback. The dollar has started to come back down, very strong bearish move back into this channel that it has been stuck in basically all year. And that's, kind of what is going on with the dollar. Riz, I know you're a big oil proponent. You watch oil very closely. What's been going on with that as of late?
Yeah. Great. Thanks for bringing it to me. So yes, oil touch on first. I'll touch on a few things actually. The main three, the oil, gold, and the dollar chart one by one. But oil first and foremost, yes, I've been watching it very closely, just like always. Just because we haven't been trading it doesn't mean we haven't been keeping an eye. Now, it has been kind of moving upwards with a low variance, meaning less volatility up or down, but it's moving up. This is great, but as Chris mentioned, the Bollinger Bands, that little gray kind of outline, think of it like the up and down sort of constraint, that's really kind of come in, right? It's come in. If you can zoom out a bit on that oil chart to kind of see how oil actually moves a little bit more, I would say, than usual, you'll see how this kind of varies. And this is more of a very tightening. This is known as a tightening in the Bollinger Bands, which leads me to believe that there may be more of a larger move in the making, right? Because everyone's kind of gotten in and now they're just waiting for a push in either direction. And we may very well get that. If I have to choose one, I am leaning more towards the bearish side. I think $60 a barrel, which is what's now, is pretty much peaked out based on supply and demand constraints. We know OPEC plus, which is, the oil producing companies plus Russia, have sort of been very, I would say very complementary in making sure supply isn't overdone, because they don't want to pump too much oil. They don't want to pump too much, because if they do, that's just going to work against them, right? It's going to decrease the price per barrel, right? Again, supply and demand, very, very important in commodities, primarily so in oil. Gold is also, think of it very much so as dependent on something else. So gold is a safe haven asset. It depends on markets, but also various different things like interest rates. Right. Interest rates, as we know, this Wednesday, if I'm not mistaken, was the Fed decision, and they elected to keep rates the same, which is what everyone in the market already thought and knew. So that wasn't something that was different. Now, that's why you'll see that gold is holding relatively stable around 1450, 1475 area, because there was no new catalyst, right? The market is still chugging along. The Fed doesn't aim to raise rates even in 2020, as they said. I mean, who knows what's going to happen, but that's what they're saying. So gold is kind of flat lines, so to speak. right? Now, the most important indicator in here, I think, is the US dollar index. Now, take a look at the US dollar breaking bearishly down, right? Remember, this is the index. This isn't the US dollar to Canadian dollar. This isn't the US dollar to uh, GBP, Great British Pound. This is the US dollar index comparing the average to all the major currencies, okay? And this is moving down uh, primarily because the Fed didn't want to raise rates. They were bearish, I would say, sorry, dovish, meaning they are more on the fence about future rate hikes, let alone future rate drops. So the US dollar is kind of correcting in a bit to account for that, for accounting for that Fed policy where rates may not be going up. Remember, if rates go up, US dollar rates go up, if US interest rates go up, US dollar index will most likely appreciate comparing to all other currencies. If rates go down, then you'll see the dollar maybe weaken in comparison to other currencies, right? So I'm not surprised by this move. I don't think the US dollar is going to like tank or something, but I think it's going to continue to move on down this way so long as the economy chugs along. President Donald Trump has stated that the US dollar is too high for his liking, and he does have somewhat of a point because when you have the US dollar too strong, it does have a negative effect on manufacturing. Okay, and of course, imports and exports are also think of it quite radically. Think of it as radically being affected simply because the US dollar is too expensive. Now, there's pros and cons. I'm not going to get into the major macro pros and cons of having a strong US dollar or having a weak US dollar. But for Trump's ideology and what he wants to do and the platform he's on, he thinks is beneficial for the US dollar to be a little bit weaker. Again, there's pros and cons to that.
Fair enough. Thank you for that insight. Now, I know we haven't been trading cryptocurrency for a while, but I always enjoy taking a look at a nice, good dumpster fire. And that is exactly what Bitcoin and cryptocurrency is going through right now. Has been very well respecting my downward, slanting resistance line here. And our advice is still stay out of crypto. Don't touch it. It's junk. Steer clear until Bitcoin bearishly breaches that 12,000 mark and holds above it. That's the real key there. We are not interested in looking at anything cryptocurrency related, and we advise kind of the same thing for you. I know some people have been asking me about cryptocurrency, but honestly, guys, just stay out of it right now. Protect yourself and don't get in that at this point. All right, let's go ahead and take a look at the trades that we took this week and discuss where they're at and what's going on. All right, so on Monday in short on Disney at 146.15. This one hasn't really broken either direction at this point. Somewhat of a consolidation. Obviously, we had a nice bearish candle here on Monday, a bit of a rebound on Tuesday through Thursday, and then a pullback down, basically sitting break even on this trade at this point as Disney closed on Friday at 146.38. Obviously, a huge move, in Disney this year with the release of Disney Plus, their streaming platform and things of that nature. You can see this here with this massive gap up, and it has been running pretty hot ever since. Hence our short position. We feel like this is overdone, overvalued at this point, and needs to have a natural pullback. We haven't seen it yet. But we still maintain that that is our position, what we believe is going to happen. And it's one of those things where we may just need to be a little patient and hold on. I see a couple people in Discord have taken this short. So, my advice would be sit tight. Everything's looking fine so far, in my opinion, as far as a short position is concerned. Moving on, short on RH in Tuesday at 234.07. This one looking abso-flipping fantastic. Blew through profit target 1 rather on looks to be Thursday. Absolute textbook short here after this massive rally. This is what we were kind of expecting on Disney, but we haven't gotten it yet. But beautiful short on entry on this. Very, very close to profit target 2 of 215. It looks like we just didn't quite make it on Friday, but absolutely looking fantastic on this short. Excellent call on that. So enjoy your money. Take it to the bank. Also on Tuesday, in short on Netflix. So in short at 294, currently a bit in the red on Netflix on this one. Let me see here. No, we did not hit stop loss of 305 on Friday, but kind of got close to it. Again, push up here, looking for the curl back over and the dip down below the moving averages. Haven't quite got it yet, but still a little bit overdone here on Netflix. And obviously Netflix in a bit of a downtrend. So we're looking to see if that will continue. Again, keep an eye on this one. Netflix can do stupid stuff, for lack of a better term. It can definitely move on you. There is quite a bit of intraday volatility on Netflix typically. So keep an eye on this. If you took it, I see several people did take that short position. So be careful on that one if you still hold it. But still, we believe in this one. And but still, again, if it hits that stop loss, do not bag hold this thing short. That was our advice. When we made the trade, it's still our advice, and so be careful with that one. Don't hold it until your account goes to zero. All right, in long on Starbucks. Might help if I spell it right, huh? There we go. In long on Tuesday at 86.07. Well, that worked out pretty well. Beautiful little push up here on Thursday and Friday on Starbucks. Great little gap up on that. And well past profit target 1 at 88, starting to push towards profit target 2 at 89.50. I see a lot of people took this one by the check marks. I want to thank everybody for indicating that for us. It gives us an idea of who's in the trade, who's not. And so that way we can continue to give, appropriate guidance as far as the trades are going. But Starbucks, absolutely textbook, curl up here after the consolidation, after this huge, selling that we had here since about, July, post earnings, and even, late, our earnings here. Didn't really help too much, but starting to curl back up and looking really good. So if you're still in that one long, make sure it doesn't turn against you, but it's looking really, really good so far. Tuesday was a busy day. In short on Xerox at 36.76. Currently slightly in the red on this one, but basically break even at this point. This short, in my opinion, still looking just fine based on the pattern. I'd like to see what it does on Monday. But definitely from the technical aspect of the trade, still looking good. We haven't come back and kind of retested this area here, which seems to be kind of important for Xerox as far as support and resistance. So if we can push down below that, I think this short is destined for good things. And looking really solid here on Xerox, in my opinion. For those of you, 5 of you that indicated that in Discord, you can feel free to continue to hold this. But obviously, if the market continues to push up higher and higher, it may be time to let it go. But just keep an eye on it is really all I'm saying. Don't let it run past stop loss on you. And just keep an eye on your trades. All right, short on PTON. This is a piece of trash. Okay, so this little thing. First off, I got to tell you, I was surprised we even had shares to short on this, which was impressive. But very new stock here. As you can see, hardly any data at all. Recent IPO here in September, back into September. So massive rally post earnings here on Peloton Interactive. We got ahead and got in short on 30.50. This one obviously did not quite work out the way we were hoping. And with these IPOs, it is kind of difficult at times because you don't have a lot of historical data to work off of. However, at the time that we took it on Wednesday, it looked really good for a short. It just didn't quite pan out. We are above stop loss at this point. And so if you still hold that, please be careful. Don't recommend holding that short for too much longer if I were you. So go ahead and let that go or find a more ideal exit. All right, Roku, if you follow the day trade channel, you should be very familiar with this ticker. In short on Roku at 139.40. Well, that worked out pretty nicely. Blew through profit target 1 on Friday with this huge rollover. And Roku looking fantastic. This short is going great. I see a lot of you took it. Enjoy your money, as we like to say, though we do have different ways for saying that. Just a couple more, 2 more tickers to look at in along on Dollar Tree DLTR. Down here. Okay, got slammed on earnings. Holy cow. What a gap down on that sucker. And starting to recover, we got in on the dip at 92.35, looking fantastic. Beautiful little uptrend here. Even with this pullback on Wednesday, this is a very common type thing. In day trading, I would say we're making a higher low. So things are looking great so far on Dollar Tree. We are up. Looks like well over $1 per share, approaching profit target 1 at 95. But this one is looking very, very nice so far. And then last one, CXO. This one we got in and we got out pretty quick. So this one in long at 80.19. We dumped this the same day we got in. Just didn't work out. We were expecting this rally to continue. It did not. And so we went ahead and dropped it. Though, not currently at stop loss, but getting pretty close. So I see a couple of you went ahead and took it. So just be careful with that if you still hold. But again, we let this go. And so you can take that for as it is. If you want to continue to hold, that's your discretion. But please understand that the fund is out. So want to go ahead and open it up to questions to anybody here. Would like talk with Riz. Now's your chance. He's here. You've got him. Any tickers you want to look at? Any questions? Riz is here to talk.
Thank you, Chris. While people do some typing, and with the questions, I do see someone is typing. With that said, great recap. Thank you again, Chris, for your commitment and for running these. Eric asking if it's too late to pick up short on Disney. Chris is bringing up Disney. I think you have to be. I'm a bit torn on this because it's looking good. I agree, it's looking good. We took this short because of what I've seen. Obviously, Disney is great on a fundamental standpoint. I am of the objective that it's a bit overvalued, but nonetheless, we know that something is overvalued can still remain and continue to go further up and increase its market cap. So ultimately, this is a technical short. On technicals, it does look good, especially because of Friday. If you would have asked, if we were on Thursday, even though we had that little bit of a pullback candle, it's a red candle, meaning it's below the open. Friday confirmed that, okay, it's looking good for a down dip. Now, understand that this is a big company. It's obviously going to move somewhat in relation to the broader market. What we do know about the broader market is bullish. All right, so this is a little bit of a conflicting trade, especially if you're looking to enter now. I'd see how things go Monday. If we see a little bit of a wash on Monday or a little bit of a red, and it's not a bullish day, then yes, you can consider entering short because it's still in play. Okay, still has some room to go down further in my view, as expressed by the profit targets. Okay, thank you, Eric, for the question and for your commitment. John asked me, thoughts on Sage Long? This one, man, just if you bring this up, Chris, you're gonna. we're pretty familiar with this and this how it moves. Big mover, huge volume in December, as you can see. This one, I think, John, you mentioned it, and I said, okay, this looks good. Maybe my memory is failing me, but yeah, this does look good for recovery. It's just solely based on technicals alone. This is a biotech, so. Obviously, we know these things have their own shenanigans. I'll keep it clean in terms of language-wise. But yes, this does look good on technicals. I am willing to wait a little bit more because I'm always afraid of this stuff reversing course very, very quickly. Okay, so Monday will be a good indicator for this. I wanted to wait it out on Friday. Because obviously Friday was an insanely choppy day, If you looked at like the 2-minute or 5-minute chart on the S&P 500 on your own time for Friday, you're going to be like, wow, this is choppy. This is whipsawing to the max. So I preferred not taking this, but on Monday will be very indicative of whether I do or not. This is on something I'm watching. So I will let you all know in as part of the Elite family if I do go along this on Monday. Good question. Thanks, John. Any other questions while we are on?
So I want to, since we're talking about Sage, my least favorite ticker on the market. Sage is the piece of shit that gave me probably my worst red day in my history as far as day trading. So it is kind of on my do not trade list. Have somewhat of a vendetta against this ticker. I also did, since you were talking about looking at the shorter time frame on the S&P 500 on Friday. There you go. That is the 5-minute chart on the S&P 500. So, or the SPY ETF. So just a crazy, crazy day for the S&P 500 on Friday.
It flattened after some of the news outlets said, okay, you know what, China's going to have a press conference later in the night, so people kind of calmed down. But before that, everything was up in the air. Is this happening? Is this not happening? So if you take a look at from 9, just pre-market even, followed by the open on the left-hand side, wow, the first hour and a half was insane. That's a large intraday variance, okay, for the S&P 500. That's a really large variance. Usually it looks like how it should after 1 o'clock, but on Friday, that's a big move, okay? So with that said, I was more cognizant of that and felt that it's better to be more cautious and let things kind of settle. And I'm glad we did because Monday seems to be little bit more stable from what I gather. Eric asked, we still holding HD, Home Depot? No, I'm not holding Home Depot. I closed this. I provided guidance on it. And Chris has got it up here as well. Chris, do you know when we took that trade on Home Depot?
Give me just a second. I'll find it.
Yep.
It looks like it was on the 6th. And if I'm not mistaken, that was, last Friday, a week ago yesterday.
Okay. Yeah. It's okay. It was, sorry, you said it was a short or long?
It was a long position.
Yeah. Okay. So that makes sense. That definitely makes sense why I took it off, because as you can see, no, the trade didn't go our way, and it's very, very important to be aware that, okay, perhaps things are not going our way. If you still hold it, not bad. Why? Because Chris has that 200-day moving average line represented in the whitish gray, and you can see it's hugging it. It's hugging it. It's fine to hold if you do. This thing is not going anywhere. Home Depot is not going anywhere. I think it does have some upside, especially after Friday. Okay, so if you still hold, give it some room. I think you're in good. I think you're in good hands so far. If trade deal did not happen, then yes, I would have been saying get out and get out now. But Monday it seems to be decent. The market should be on your side, Eric, if you still hold this. John asks, she is short as proxy due to an option right. So I'm assuming, wrote calls, John. So Chris is bringing up big lots. I don't know what strike you wrote, but yes, this looks good. This looks good. And effectively, I may at some point get in short. Like I said, because we spoke about this in the chat room, and I said let it cool off because this is a very much of a squeeze. And someone asked me, I can't remember who, maybe it was John, how do I know it's a squeeze? There's no short float percentage on Finviz, and I said just by looking at it. Yes, right, John. I remember that. So just by looking at it, I can tell you this thing squeezed, especially after earnings. This is not uncommon at all. Take a look at it again up against the 200-day moving average as expressed by that grayish white line. So yeah, it's a big rejection. Let's see how things go Monday. I may come in and short around 26 and a bit if it does look good, and then maybe write it down to 25, 24. And ideal would be 22 around the, Chris has a 90 moving average, but the 50-day also is very close. So 22 would be ideal if it can move it down to that. Again, that's best case scenario. Let's see how things go on Monday. All right, John, thanks for bringing these up. Monday is going to be one of those things where we take a look and see how things go for Sage and for Big. Any other questions as we wrap it up? Great session. Again, it's always a pleasure being on, interacting with you guys, giving my insights. I love the interaction. I hope that these videos, these recaps, these webinars are helping you, giving you value, giving you insights as to what we're doing and what we think, and visually too, right? I think that's the most important thing. Visually, you're able to see, how things are playing out. So absolutely. Thank you, Eric. Thanks for being a part of this, and John as well. Of course, absolutely appreciate each and every one of you. Thank you everyone for coming on. I think this is it for now. Chris, thanks again. I think we'll wrap it up, call it a night, and we'll get the recording up to you guys as well for those of you that couldn't attend. That's it for me. Take care. Ciao.
Yeah, thanks everybody for coming out. I really appreciate it. And Riz, thanks for coming on tonight and sharing your wisdom and being part of this. It's fantastic having you on the show as always, and I appreciate everybody coming out tonight and all the participation. It was great having everybody. As I always like to say at the end of the webinar, please don't hesitate to ever reach out if you have any questions for any of us. We are always available to you in Discord. So don't hesitate to send us a private message on there or just ask in the general chat if you're cool with that. I know some people have said they're scared to ask questions in general chat. I don't know why. We don't flame anybody. I don't care whether it's a hard question or an easy question or even something simple. No one's going to give you a hard time about it. So please don't hesitate to ask questions. We're here to help. We want to help you get better, grow, and be a profitable trader. So everybody have a fantastic rest of your weekend. I hope you enjoy it, and we'll catch you.